Hello everyone, this is Marshall Giller, Head of Investment Research here at FX Primus, bringing you the scheduled events for the week beginning February 22nd. The focus this week won't be on individual central banks, as there are no major central bank meetings or minutes being released. Rather, the focus will be on the possibility of some global policy coordination as finance ministers and central bankers of the G20 meet Friday and Saturday in Shanghai. But at their last meeting in September, they reaffirmed their, quote, commitment to move toward more market-determined exchange rate systems and exchange rate flexibility, unquote. It's hard to see how they could transform that into another Plaza Accord. I expect them to reaffirm their commitment to market-determined exchange rates, which would tend to be positive for the dollar. In the absence of any central bank meetings, the market's likely to pay close attention to the several U.S. Federal Reserve presidents speaking. So far, the presidents that have spoken have generally struck a dovish tone. More such dovish comments could be a negative for the dollar. For the indicators, the preliminary PMIs for February are coming out for the major economies. These will give us the first glimpse of how activity is going this month. There are many signs that real activity is nowhere near as bad as financial markets have been saying. Now, if the PMIs do indeed hold up, they could bring back some confidence to the market and further boost the risk-on mood. The obvious beneficiaries of that would be the US dollar and the Australian dollar and the other commodity currencies, and it would be to the detriment of the yen and Swiss franc, the safe haven currencies. Similarly, the IFO index on Tuesday is likely to be market moving for the euro. The second estimates of fourth quarter GDP figures are coming out for Germany, the UK, and the US. Now, estimates for U.S. first quarter GDP are running rather high. The Atlanta Fed's GDP Now model is forecasting 2.6% growth. So, an upward revision to the fourth quarter figure might make that forecast more believable and thereby boost the dollar. Inflation figures from Japan on Friday, Japan time, that is, will show if the Bank of Japan has had any more success in digging the country out from deflation. My guess is no, which I suspect would lead to expectations of further Bank of Japan easing and therefore a weaker yen. Germany's provisional CPI for February comes out on Friday as well, and that'll be closely watched to get a hint of what the ECB will be up against at its next meeting. Australia releases its private new capital expenditure data for the fourth quarter on Thursday. The market will want to see the non-mining sector taking over from the mining sector in order to confirm the sustainability of the recent good employment data. Otherwise, the Australian dollar could suffer. And New Zealand trade data for January, due out Friday New Zealand time, is expected to show a widening of the country's trade deficit. This may prove negative for the QE. This is Marshall Giller, Head of Investment Research at FX Primus. Get more market insights on our education pages and turn your trading ideas into action with FX Primus, the safest place to trade.